Welcome to this episode number 48 of your next trade called today Climax coming. So this week we had two big moves. One started on Monday, or should I say from Sunday to Monday, with gold that overshoot. That is something that we flagged over the last weekend, that gold was going into a very important level, the 2080. And as we can see in this chart, it has been overshooting. So it went to 2130 and then came down. So that's the first climax. Then on Thursday, we had the second climax, which was this one, which was on the dollar yen, where we saw some strength in the Japanese yen after the comments from the Bank of Japan and some expectations that on the 18th and 19th of December, that the Bank of Japan will be tweaking a bit their policies. So why is it so important? Because we see more and more big moves, some climax, and that is true across the different asset classes, starting with commodities. Then we moved into FX with the dollar yen. And we should expect as well some big moves on a different asset class, which is stocks. So we've seen stocks moving big time since the lows that we had at the end of October, starting of November. Since then, we have been moving big time. So as we covered last weekend, November was a very strong month for stocks, which were up 10%. And what we've seen is many flows coming. We've seen some options. So we discussed in detail, how the different strikes that were the 4450 on the S&P, the 4500, then the 4600, have been making stocks going higher. Over the last couple of weeks, what we've seen, what we have covered as well, is the market was pretty much between 4550 and 4600, very much because the options have not been changing if you look at the open interest. In terms of Climax, what could happen is we have next Friday the option expiry. We do know that stocks are more and more driven by options. 50 to 70% actually of the volume will be driven by options. So if we are looking for climax, if we are looking for a big move, if we are looking for the end of the move, that could be one of the things to be looking at. So starting with, as always, with the week-to-date asset performance. Actually, as I've been saying last weekend, the first 10 days of December, normally for the S&P, if you look at seasonality, there is not much happening. And guess what? The S&P is up 10 points on the week. Not much really happening. Interestingly, what you see here, and there is a bit of a struggle for me. I put like a decent short. So as you know, I was short Europe. I covered at the end of October before going to New York. And I've been resizing that position, that short position. On Europe, Europe very strong, 2.4%. There is a kind of mechanical move due to options, due to flows, where the Euro Stoxx 50, the Stoxx 600, so anything that is Europe have been ticking up and up and up and up. So no downtick. On the other of the spectrum, we get Japan down 3.4%. It's pretty obvious that is due to the strength of the Japanese yen. So for those of you who have been telling for the last 6 months, the Japanese economy is doing much better, blah, blah, blah. It's mostly about currency. So don't get me wrong. If the dollar yen keep on weakening, that's going to be the same with the stocks in Japan. If you look now at currencies, so a dollar, euro dollar down 1.1%. So a bit of weakness of or strength of the US dollar across and against most currencies except the Japanese yen. Bitcoin still doing the hoo-ha-ha, so we are pretty much into the 2020, 21, 22 stories where Bitcoin, crypto going up, all the most shorted stocks outperforming, so really looking for pain. And the reason is pretty obvious. Many market participants have been going from we're going to stay higher for longer, where the central banks are going to be keeping yields very high, to actually the banks will be changing their policy and turning in 2024. So if we look both at the Fed, as we're going to see later, the expectations are for the Fed to cut rates by 1% in 2024, and for the ECB by 1.5%. So very aggressive from the expectation. As we're going to see on Wednesday, we got the FOMC meeting, then we got the ECB. So important. Gold, WTI down on the week, copper down on the week. So commodities struggling for this and against this strength of the US dollar. So now looking at the week to date industry performance, starting with the S&P, which is roughly here. So as you can see, between the minus and the plus, it's rotation. S&P not moving, but in between you do have like a lot of rotation between the different industries, between the winners and the losers. So home builders have started to put a short through a put spread. On the other end of the spectrum, obviously silver, gold miners. But for the week, what we have is the indexes are not moving very much, but inside we do have a lot of rotation. Why? Because people are flattening their book going into the end of the year, and they'll be reducing some of their exposure. What about the sector's performance? So I'm interested into the week-to-date sector performance. Energy is struggling, obviously, because WTI has been very weak on the week, and telco strong. The reason is, as always, you need to be looking at what are the members, what are the weightings of any ETF, and for the telco, you're going to have a lot of Google into it, and Google has been very strong with artificial intelligence. What about the rates? Starting with the US 10 years, similar picture, 423, and we are flattish on the week. So a lot of assets, and I'm not talking commodities, I'm not talking FX, but I'm talking stocks and bonds, have been pretty much not moving and waiting for the next move. We had a lot of moves for the year on those two asset classes, and more importantly, we had a huge move in November. So we get consolidation and a bit of churning the book. We are down 50 bips on the yield curve, the 10 versus the 2, so we are quite negative. Again, if you believe in macro, if you believe in leading indicator, that tells you that at some point the US economy might go into recession. So I'm a bit of a broken record on this, and I've been so far wrong on the US consumer. I thought that the US consumer will be struggling from October onwards, but the US consumer, as always, could be surprising using credit cards, but we see that credit cards delinquencies are going on the way up. So let's look at 2024 and how it could unfold. Looking at the FOMC expectations, so we are at 5.33 on the Fed fund rates. No moves, no change are expecting from this Wednesday FOMC meeting. What about the expectations for 2024? So 533 minus 432 gives you a differential of 101 or 100. So what the market is pricing is the Fed to be cutting rates by 100 bips, 1% in 2024. As I said just before, ECB is expected to go to lower rates by 1.5%. And what it gives, it's obviously strong move for market participants to say central banks are going to be very accommodative. I go back to risk. And as we've seen for stocks, as we've seen in the US, as we've seen in Europe, very strong move. So stocks, very strong. What about the VIX? VIX is at 13%, so very low level. We are roughly flattish on the week. Sorry, there is no chart here, but obviously that will give you something like this. We are going down and down. So VIX at very low level. It's going to be hard to be moving the VIX before this expiry on Friday, and very much what happens between the end of the year into New Year. It's hard to be moving even more. So should we expect the market to be going higher and higher over the next 6 weeks from this expiry into January expiry? That is a possibility. I do believe that there are some markets that are way too extended. So let's start with the charts. I'm gonna be using my Bloomberg because the contract on the S&P will be changing from tomorrow, even if the expiry is from Monday, even if the expiry is on Friday, you have many products that will be only adjusting later. So What about the S&P? As we can see, grinding a bit higher. We've done this overshooting here that we flagged when we said, you know, at 4,200, that is probably a good level to buy back your short. We overshoot, and since then, you know, a very strong move on the way up. So that's the color. We have been trading sideways between 45.50, 4600. We closed a bit above the 4600, but if you think about the S&P cash, this is roughly the level. Different levels to be looking. This 4600, there is its 45.15 from the JP Morgan color, but you know, it feels still very much squeezy. If we do the same with the Nasdaq mini, it's very much the same. Is it going to be uploading? Yeah. So we have been trading sideways, consolidating at the highs, a bit more of a move because obviously the Nasdaq is a bit more volatile. So let's go back into trading view, and I want to be looking at the FANG of this world versus the S&P. This is the consolidation on the way up. So that has been the story of the year, the FANG. So if you start from 2023, if you look at the FANG versus the S&P, this is where the money has been made. The Nvidia, the Meta, all those names really outperforming. We do know why, because, you know, ETFs, because, you know, people chasing the same name. So question mark going into in 2024, can we see some rotation? CL1 going to commodities, so trading around the 70. I guess the Saudis and the Russians are not very happy. Biden administration must be, on the other hand, very happy. Why? US production has been, you know, on the way up from 13 million to 18 million. Copper trading sideways, not much of a giving you any leads of what's going to happen next. The Chinese numbers, the macro numbers, if macro still matters, are still pretty poor. Gold, so that is the chart that we flagged, and I'm not going to pretend, you know, that I made a killing on it. It's the 2080, and we overshoot here. Everyone was looking at it, 2080, we overshoot. The funny thing is, it happened when most people were sleeping, unless you were trading in Asia, so very early for us in Europe, and even more earlier for the people trading from the US. And since then, we have been trading lower. So 4% from the 2080. Overshoot. This is the climax. The second climax will have been the dollar yen. So here, this is the dollar yen. As I said, I was long the yen, so I made a bit of money on this. That is probably where the only place where I made money recently. But now we are back to the 145 level, roughly, which is, you know, the support that's become a resistance. It's going to be interesting, 18th of 19th, so that's something to be putting on your calendar. That will be after the FOMC meeting, that will be after the option expiry, is the Bank of Japan tweeting their policy. Euro dollar trading sideways. We are waiting for the next catalyst with the FOMC on Wednesday and the ECB on Thursday. What else would I want to say? There are many charts that are telling you, you know, we are reaching important level. That is true for JP Morgan. That is true as well for Apple. That is, you know, testing recent highs. So going back into up to this week. So what happened for the week? This is first for the S&P futures. So we closed at 4600, a bit above. As you can see, this is a 50 points range. I've been really flagging this one, this 4550, 4600. So for once, I've not been completely wrong. We had a bit of a move on Thursday, on Friday, a bit of a noise, but overall, you know, not much moving. So here, this was the FANG. Before that was the FANG on the way down. But in between, what we had is the dollar yen. So dollar yen on Thursday. That is a chart that I've been flagging over and over. On the left-hand side, you get the dollar yen. On the right-hand side, you get the differential of rates between the US 10 years and the Japanese 10 years. And as you can see, there is a strong correlation. So if we believe that there's going to be a change in the Bank of Japan policy, there is a good chance that the Japanese yen will strengthen even more. That is even more true if you look at the commitment of traders, if you look at any positioning, and many hedge funds have been short the Japanese yen. So you could have more than this on the Climax. Something that I want to flag as well is the strength of the European market. I'm talking stocks versus the US. So here I've been putting in white, that is full before that chart, in white the S&P and in orange the Euro stocks in dollar term. Okay, and as you can see for the year, we are roughly doing the same. And that tells you a lot about this market. Over the last 12 months, there has been a strong correlation between those assets. So kind of one correlation, everything is moving the same, everything is kind of mechanical, robotic moving. And why is it so? Because people are putting the money depending on where they see the central banks doing. So we saw in October, September, October, that everyone was freaking out and saying we're going to stay higher for longer. So we had this big move. Then many market participants say, okay, this is the other way around. The central banks will have to be cutting rates in 2024, and suddenly, stocks really lack this move. So going forward, what are the catalysts? So we have a lot of things to cover for this week. We have the central banks. So that will be on Wednesday with in the US, the FOMC rate decisions. As you can see, recently there's been a bit of ups and downs for the S&P on FOMC day. So what we should expect from Powell and the Fed is obviously they're going to be saying, as always, that they are data dependent, that the more recent data have been pretty positive, that still, they should be making sure that they don't react too quickly because they don't want to see inflation coming back again. But just before, we're going to have the CPI data on Tuesday, and the inflation number have been coming down, expectations have been coming down. So it kind of a blue sky scenario for the Fed where we have a strong GDP, where inflation is coming down, where actually the NFP numbers that we had on Friday were okay. If you look into the NFP's numbers into more details, the job creation were coming mostly from three places: healthcare, it was healthcare, government, and the last one was hotel, and so three places. But overall, this is not well spread, and you see that the numbers, the average is coming down. So that tells you that the US economy has been really slowing and is still slowing. So FOMC rate decision, not much no change expected, but 2024, the dots are going to be important. On Thursday, we got the ECB, the Bank of England, and the Norway rate decision. ECB will be very important. The reason has been that, as I said, Euro stocks, DAX, Stock 600 has been very, very strong. So we have been making new highs on the DAX, new highs on the Stocks 50, on the hope that they'll be cutting rates quite aggressively in 2024. A bit of retail sales on Thursday. That has been where I've been struggling with the US consumer. I think the retail sales will come down, and they will come down soon. We have, with the retail sales, the Costco, some names, some interesting names for Oracle. On Monday, we got Adobe. On Wednesday, and Costco and Lena as well, if you get exposure to that space. So that will be some of the names. So obviously no Fed blackout period. We are still, we're going to have after Wednesday Fed speakers. And finally, the option expiry. This one is really, really important. This is the third Friday of the month of December. So the last big one. If you think about how, and this is here, and this is coming from stocktradersalmanac.com. So, and it's on Twitter, on some, if you follow some people. Normally this week, this expiry week in December has been okay if you look at the week here. So this is, the number is pretty good, but over the last 2 years we had negative numbers. Market has been trading, as I said, between 4550, 4600 stock between the pin of options. We started to see some calls at 4700, 4800. So we might see after the expiry, and I'm talking about calls that are expiring at the end of December. And if you look as well at the seasonality, the usual move, which is another 2 to 3% on the web. To me, the market is very much extended, and I'm talking particularly in Europe. But but you know, as always, when you go short those beasts, you could have some trouble before it goes your way. Finally, weekly straddle 1.5%, a bit above last week, but not very different. We are very much into low volatility. That doesn't mean that volatility could go lower. So 4600 level to check, option expiry, retail sales, central banks, and some earnings. So finally, if you are interested, if you like what I do, so first, you know, put a comment below, put a like, and if you want to learn, if you want to get the same process as a professional, I'm offering a 25% holiday discount on the 4x4 video series until the end of the year. So you could be using the coupon code that will be in the comment section below. Any questions that you have, or if you want to join the Discord community, we do have like 3 channels. The community is growing, and I hope that, you know, by doing those weekly videos, I'm helping you in your trading. So this is it for me for the week. Have a good trading week. Bye bye.